Hello and welcome to the first part of Understanding Pharmacy Finance with Hazelwoods. My name is Richard Pontin-Mead and I will be covering today's topic of gross profit. What we will cover in today's session on the gross profit is what is the gross profit margin, how to calculate the gross profit margin, what we include in turnover and cost of sales, how do we calculate the NHS medicine margin? Why do pharmacies have different margins? And what do we expect to see as our gross profit margins? So let's start with defining what gross profit is. The gross profit margin for pharmacies is the profit on the sale of products, dispensing and delivering services. The profit is typically taken before taking into account any wages and salaries, locum and administrative expenses, plus interest and tax. We would normally see the gross profit margin expressed as a percentage, and we would often see the term GP percentage. The gross profit percentage will tend to vary between pharmacies, and today we will cover how to calculate that gross profit margin and why it does differ between those pharmacies. The next slide covers how to calculate the gross profit margin. So in our example today, we have a turnover of approximately 1 million in the 2020 year end. We have cost of sales of 700,000. And this means that when we take the cost of sales away from the turnover, this will give us a gross profit of 300,000. In order to calculate the GP percentage, we will divide the gross profit of 300,000 by the turnover of 1 million to give us a GP percentage of 30%. In order to compare the gross profit percentage between pharmacies, it is important to be consistent on what is included in turnover and the cost of sales figure. We will now move on to look at what we should include in our turnover figure. What we have found in our pharmacy clients is that the gross profit margin will vary between pharmacies, and the big factor that is causing this variation between pharmacies, even within the same group, is the different mixes of turnover. We would expect the mix of turnover within a pharmacy to change over the next few years as more and more pharmacies turn to different services in order to maintain their profits and also to increase it. Therefore, if you are looking to calculate the gross profit margin, we would recommend that you break the turnover down as much as possible into the different categories so you can have a direct comparison between pharmacies. When calculating the gross profit for pharmacies, turnover should not include things like rebates and discounts from suppliers. These should be taken off your cost of sales figure instead. We would recommend that you don't include wholesale turnover, as not all pharmacies will be doing wholesale. And we'd also recommend removing any one-off or exceptional income, included any associated costs with that income from your calculation. This should enable you to be able to compare your margin with another pharmacy. As well as breaking down the turnover into the main categories such as NHS, OTC and retail turnover and other services, we'd also recommend breaking down your NHS turnover into each main category as well, because again, the income from the NHS will vary between pharmacies. For example, one pharmacy will be performing a significant number of new medicine services and another pharmacy may not. and this could impact on the gross profit margin. On our next slide, we have set out a basic example of the turnover breakdown that you should be looking to perform in order to compare your gross profit margin. As you can see from the example, we have broken down the NHS income between drug and appliance costs, fee income, other amounts authorised from the LLP, and other amounts received. We've also separated the retail and OTC sales, other services, and wholesale turnover. And as stated previously, we would look to remove that wholesale turnover in order to have a direct comparison with other pharmacies. Now that we've broken down a turnover, we now need to look at what is included in cost of sales. Cost of sales will vary between different sectors, and what you include in cost of sales will therefore vary. Our example on the slide shows that we would include the opening stock figure of 100,000 in our example, purchases of 840,000. We would deduct rebates and discounts received from our wholesalers of 20,000, and we would also deduct the closing stock figure of 120,000, and this will give us a cost of sales figure of 700,000. We do not include any costs in relation to wages and salaries or locums, and we should also exclude any costs in relation to wholesale turnover. The cost of sales, therefore, only includes the cost of buying the products to either dispense or sell over the counter. Most accountants will calculate the gross profit only in total in your year-end financial statements. However, we at Hazelwood tend to look a bit deeper into the gross profit margin, and we'll also look at what margin we are making on dispensing the products on an NHS prescription. The NHS prescription income tends to take up the majority of an income for a pharmacy, and therefore it is important to understand how well you are performing in terms of buying the products and what profit you are making from dispensing the medicines. On our next slide, we have set an example on how to calculate the margin on your NHS dispensing. What you will need in order to do this, you will need your NHS statements for the last 12 months and your cost of sales figure from your financial statements. In our example, we have taken the total drug and appliance costs as per the NHS statement for the last 12 months, which totals in this case 720,000. We have then deducted the cost of sales from this figure. In order to deduct the right figure from cost of sales, we may need to adjust the cost of sales for costs in relation to retail and over-the-counter medicines. If you do not know the split between the NHS cost of purchasing the medicines and the retail and counter side, we would recommend using a gross profit margin of 40% on your retail sales in order to calculate the cost of sales for the retail element. In our example today, we've got 720,000 as the turnover, less a cost of sales figure of 640,000 to give us a gross profit on medicine of £80,000. This gives us a GP percentage of 11% on NHS dispensing. This figure obviously excludes any fees being received in terms of dispensing and other services. One of the most common questions that we get asked being a pharmacy specialist is, why does the gross profit margin differ between pharmacies? And there are a number of reasons why this is the case. And as stated before, This can range from the turnover and sales mix of a particular pharmacy being different in terms of NHS dispensing to retail and OTC sales. If the number of services at a particular pharmacy is higher compared to another pharmacy, you may see a higher gross profit margin where the services are higher, because typically these services tend to be 100% gross profit margin. Also, and one of the most important points is that the dispensing mix between pharmacies can also have a major impact on the gross profit margin. For example, a pharmacy with a large amount of branded medicines will typically have a lower gross profit margin when compared to generic medicines. A pharmacy can also have a different margin compared to another pharmacy when they've applied a higher markup to their OTC and retail sales, and that could be just because of a different geographical location. The margin will also vary depending on how well you have bought from your wholesalers and the prices and discounts that you receive from them. The gross profit margin again will vary depending on how well you control your buying and how much waste is in that process. And therefore, good stock management will help improve your gross profit margin. In order to improve the gross profit margin, we'd always recommend it to our clients to do a number of things. The first thing to do is to contact your wholesalers and provider of medicines to ensure that you're getting the best prices and discounts that they are willing to give to you. Next, we would recommend that you put a buying process in place to ensure that the correct stock is bought from the correct supplier based on the prices that you are being offered. As part of the buying process, we would always recommend that you review the quantity that you are buying to ensure that there's no waste. And lastly, we would always recommend that you review your prices for retail and OTC products to ensure that your prices are competitive in the local market. As part of Hazelwood service, we compile a benchmark for our clients each year. And I've covered in this slide the expected gross profit percentages that we see typically from our clients. The overall gross profit percentage for a pharmacy tends to be between 28% and 40%, with our average being 33%. The NHS medicine margin ranges between 9 and 20%, with our average being 12%. If you would like any further details or would like to discuss your gross profit margin or any aspect of the finance within the pharmacy, my contact details are set out on our final slide.